Good morning, good afternoon, good evening, folks. Michael Zuber, one Ritzel at a time. We have a returning guest and someone you knew we had to have back, Mr. Brian Leba. How you doing, sir?
What's up, everyone? How are you? Thanks for having me on.
For those that don't know, you are my resident Las Vegas expert. We have been talking about the Vegas market for greater than 2 years now. And all I got to say, the party's over, right? It's got to be time. The party has to be over finally, right?
It's over. And hey, you know what? Just for your audience, I don't know if you guys watching at home, do you know that we have a celebrity? You're watching a celebrity. This man was featured in Business Insider magazine. So you are watching and subscribed to an actual celebrity now. Domestic celebrity, maybe international.
maybe. So let's talk about Vegas. It has changed. And again, I think the party is over is a fair, right? There's still people at the party, but you know when a party's over, it's over. And now people are milling about the drunks, the druggies, the cops have been called, right? The party's over.
Exactly. Like right now is, for me, this is the opening salvo, right? The cool kid just walked out of the party.
Yeah, he gone.
He grabbed his girl. He just swooped out. That seems maybe normal par for the course, but you have no idea what's coming behind.
He got a note, or he got a DM saying the cops have been called. So he's like, honey,
yeah,
let's go.
Yeah. So, today we're going to discuss, I can't speak about real estate on a domestic level because I specialize in Las Vegas. So it'd be really arrogant for me to discuss other areas and always be a little bit weary of people that speak so broadly, because it's very difficult. What I'm going to say today may or may not be indicative of what's going on where you live. So a grain of salt, but a lot of times areas that appreciate incredibly fast are also the ones to experience the most pain coming down. So a lot of times, your areas like Phoenix, Las Vegas, Miami, Coeur d'Alene, Idaho, which went crazy.
Nuts.
These are just the first ones to react. And then it's a trickle down effect. So this may or may not be affecting you, but it will. So again, we are now opening the first round. And this is a really, really interesting position that we're in, because in 1 month, I think the pain is here. And the reason I say
wow, 1 month.
Yeah. And the reason is this, right now, everything has already been set in motion and things are already happening, but the news only reports what happened, not what's happening or prognosticating as to what will happen. Okay. So the problem is, while things are occurring right now, you have a 50% margin. You have 50% of people out there that see what's happening, understand what's happening, and are willing to react to what's happening. And then you have people that don't really understand what's happening yet. They're still living 3 months in the past. So you still have some agents, some buyers that are putting in list price offers that still are a few months behind where we're at. You still have sellers that believe, at least in Las Vegas, that we're going to get some wealthy Californian with a suitcase full of money, and they're going to get top dollar for their house. It's going
wish pricing, baby.
Wish pricing at its finest, and that's fine. But after a week, after 2 weeks, after 3 weeks, no matter how optimistic you want to believe that you are, there's no refuting the results. And so that's why I say it's happening. We're in the middle of this change, but in 1 month, that change is solidified. No matter how foolishly optimistic you are, you're going to get slapped in reality here very, very quickly, and it's happening. So today, we're going to kind of walk you guys through what's happening, why I'm so bearish on where we're going, and then the next steps. Because for a lot of your audience out there, I mean, if you're 30 years old, you were 15 years old the last time this happened. You were not cognizant, you were not paying attention. So it's really important to understand what's happening and where we're going and how to read things. So
yeah, when I think about what's going on, and again, folks, I talk a lot nationally, median home price, all of this stuff. We're getting very specific to a market. And again, all of you should have buy boxes, right? If you're following what I talk about, you have a buy box. Know your buy box. National numbers don't matter. City numbers don't matter. Learn your buy box. But Brian, when I think about Las Vegas or any market, boom and bust, I have an Inland Empire agent. I have a high desert agent. They're all telling me this is happening. And it's kind of those markets that move first one way, also go the other way. It's pretty common. I'm guessing inventory has exploded noticeably higher.
And so this is exactly where the disconnect falls, right?
Okay.
Typically, news organizations report monthly, right? The numbers just came out from the Realtors Association last month. So it's a once a month type deal. But in a situation like this, things are moving very, very rapidly. And what? Today is only the 22nd. So we've got 2 weeks before the news media picks up on this. So here's, when you're in these situations, the best way to predict where the market is going is to closely monitor the inventory levels, right?
Agreed.
If inventory levels are dropping, supply and demand's out of whack, and you know prices are going to reflect that. Now, conversely, when inventory starts rising, you really have to look at that and go, okay, is this isolated? Did we have 3 bad weeks? Sometimes you have 3 crazy weeks, then for no reason it reverses. So that's why in the last couple of months videos, I said, hey, we really need to keep an eye on this, but let's not make sure this isn't just an isolated occurrence as opposed to a trend. This starts happening 2, 3, 4 months. Now you have a trend on your hand and you really have to, heed that warning. So let me go over this with you. I'm going to pull up these numbers. So in Las Vegas, our inventory has gone up for 9 weeks in a row, which, look, that's not good by any metric, but there have been times before where inventory has risen for 9 weeks and then it tapers off and we have normality. So again, don't freak out just because something is trending. But here's why I'm more inclined to freak out, because look, listen to these numbers, right? If you're going up a little bit here and there, whatever. 9 weeks ago, we had 2,272 homes on the market. This is a Wednesday, 9 weeks ago, exactly 9 weeks ago. We added 117 homes. Okay. All right. Well, whatever. 2 weeks before that, we had added 249 and then we dropped 6. So you can't really freak out about it. So 117. Okay. Next week, 125. Okay. All right. Then we had 207. All right. Well, that's getting a little bit
now
high.
we got a trend.
Now we got a little bit of a trend, but then we had 133. So you're like, okay, maybe we're going the other way. Let's be optimistic.
Okay.
But then we had 258.
Oh.
Then we had 288 the next week.
Oh, no.
Then the next week we had 297. Are we going to break through 300 homes in a week? That's 1,200 in a month. All right. Well, the next week we had 303. 2 weeks ago.
That's 50 a day.
2 weeks ago, we had 427 in 1 week. Now, right before I did this interview, I pulled the numbers because this is a Wednesday and that's when I pull my numbers. We went up in this last week, 450 homes. In 1 week, our inventory rose 10.44% in 1 week. 9 weeks ago, we had 2,272 homes on the market. Right now, we have 4,760. We've more than doubled our inventory in literally 9 weeks. So, I mean, how else are you supposed to look at that? It's not just that inventory is increasing. What's disturbing is the rate by which the inventory is increasing.
Yes.
If we were 100 homes here, then we had 50, then 120, then 60. We're meandering. It's trending the wrong direction, which really was the right direction, but nothing to freak out about.
So I've got so many questions, man.
All right, go for it.
The first question I have is, you have the numbers up in front of you. Go back to 2018 for me, pre-pandemic. Pick whatever month. Well, actually, what month we're in June. If you have the months for June 18, just so I know, what was the available inventory June of 18?
All right. So June 14, well, let's go June 21st of 2018. That would have been yesterday, 4 years ago. We had 4,358.
So we are 10% above a normal year and trending the wrong way.
But if you look at 2019,
okay.
So again, I mean, look, things can be odd. In 2018 in June, we had 4,311. June 12th of 2019, pre-pandemic, we had 7,979.
Oh.
But then what happened is from June 19th, 2019 to by the end of the year, by December, we were down to 5,800. So, I mean, we shed 2,000 homes in 6 months in 2019, and that was before the pandemic.
Pre-pandemic, yeah. But
Yeah.
still,
And yeah.
so this is where this is again why you've got to know your market, your buy box. I believe most markets are going to race back to whatever their 2018 numbers were, roughly speaking, right? Again, Las Vegas forever was, I think you were sub 2,000 for a while.
Yeah, we dropped below 2,000, which was a huge
crazy.
number to break through. I mean,
Yeah.
pretty unprecedented.
And that's why you have bidding wars and stupidity with Californians with suitcases of money, because that's how it's the only way you can play.
Yeah.
Now you've raced back to 18. The inventory is where I go first. Here's number 2, days on market. Because not only do you have fear of missing out from sellers, which clearly you have as more sellers throw on a rising trend and an accelerating trend, but guess what? Your buyers are going to start freaking backing away, both because they can't afford it, but now they're seeing headlines and they're like, whoa, I'm going to pull back. So you've got a really bad combination.
So yeah, and again, for your younger viewers, we've been through this a couple of times.
Yeah.
And what I tried when we talked, probably one of our first interviews, I said I didn't think housing was going to collapse under its own weight. The housing market would collapse under the weight of Wall Street and crypto. Do you remember, like,
I do.
Forever ago, I said that was going to be what brought housing down. Mm-hmm. One, this is an incredible conflation of events that all happened at the same time.
Yeah.
So that's what's a little disturbing. And then also, it does go back to, what I said, that external factors were going to be at play. Here's kind of where we're at and where things are going. And this is why it's a little bit disturbing. I think even if we didn't have the interest rates, even if we didn't have a lot of these external factors, we would have been somewhat in this position, but a smooth slowdown. What I think a lot of people are discounting is the fact that, again, one, the party never lasts forever. You can't have continued growth at that level, at that rate forever. So eventually you're going to have a normal come down. That's normal. Now, one conflation was you had like a 5-year migration pattern period conflated into the span of like 1.5, 2 years. For us, it's everyone in the Bay Area, everyone in Southern California, everyone who got tired of the taxes, got tired of the politics. And then you combine that with work from home opportunities. And once people can afford to live in less expensive areas, have more, and yet still receive the same income, that was a ridiculous, absurd moment in history where 5 years of migration occurred in a year and a half.
Yeah.
So that's one of the big reasons why prices went the way they did. And that wasn't normal. That wasn't natural. Of course, low interest rates, everything else, it just exacerbated what already was going to occur. Mm-hmm. Now you have a situation where the majority of wealthy individuals already made that move for tax purposes, lifestyle, politics. The majority of people who are going to exit their state, and I'll leave it at that, they've already done that. So we probably weren't going to see a real heavy amount of migration for the next few years anyways, because the people that wanted out already got out. So you already have the migration pattern. Then again, you have interest rates. Now interest rates are double what they were at the beginning of the year. That's going to kill everyone. So between those two, that's a problem. Now, then the third factor is especially on the high end, where you have less demand than you do on the low end. So it's a little bit more sensitive with Wall Street portfolios getting crushed. All the crypto kids got wiped out. All this easy, free income that we've seen for the last 3 to 5 years no longer exists. But again, this is the opening salvo. The pain hasn't even been felt. You may have lost half of your net worth. You may be stressed out, but the real pain hasn't even begun yet. So guys, here's kind of the next succession of events that tend to occur in a situation like this. Obviously, right now, things look troubling. But once the media starts grabbing a hold of how much inventory has gone up, and it's going to be irrefutable that things are in peril, we're 2 to 4 weeks from that really hitting home.
Yes.
Where things go from troubling to just straight up bad overnight is when this comes out, buyers go, oh shit. Well, the market's going down. I think we're going to wait. And guess what? It's a self-fulfilling prophecy. If everyone says we're going to wait, prices go down because if no one buys, there's people that want to sell, and then there's people that have to sell. And those are two fundamental differences.
Yeah, I want to poke at that a little bit because I want people to really hear this. I am saying, again, these are national, not Vegas. Vegas is very unique. I am saying the first thing to happen, Brian, is transactions are going to crater, which means you have an agreed seller and agreed buyer, right? That is a transaction, not wish pricing, not hope pricing, an actual transaction. So I think nationally we could see housing transactions fall 50% immediately. So do you have the numbers for how many transactions maybe closed a month or two ago in Vegas, or do you not have that?
Yeah, give me 1 second. I can pull that pretty easily. So let's see.
Because I think what's going to happen is Vegas is going to lead this. I think you're going to see actual closings crater.
No, and you know what? The big thing is we're already starting to see a lot of cancellations happen, especially,
Exactly.
On resale homes for sure. But, in 3 years, there hasn't been any such standing inventory for new homes. In fact, they don't have enough new homes to provide the demand. Yeah. And now every single day I'm getting emails about standing inventory. One builder they haven't even put the homes on the MLS, but they put them on Zillow for some reason. And on Zillow, I've noticed that the price of the home, brand new home, the price 2 weeks in a row, they've lowered the price for a brand new home.
Yeah. So while you pull those numbers up, do you remember our very first conversation? Our very first conversation was reminiscing about the last crash, and you gave me a piece of data that I have held on to for 3 years.
Okay.
And this is it, Michael. There's trouble when builders slash the cost of their lots.
Right.
So Brian, have you seen any builders slash the cost of their lots?
I've seen I've seen a reduction, not as dramatic yet.
Oh no, it's opening salvo, but it is starting.
Again, yeah. So the kiss of death is you never lower the price of homes; you start giving away things.
Exactly.
So that was peculiar. That was Richmond American that lowered the prices on a couple of their homes. But I am seeing, we're offering a lower lot premium. And that's the
where
easiest
it starts.
thing to chop. That's the easiest thing to chop.
You gave me that years ago. I'm like, damn it, someday this is going to come back.
Oh yeah,
and we are here.
As soon as I get an email saying lowered a lot premiums,
like,
the big thing too is just the fact that you're already seeing standing inventory. So I mean, in order to have standing inventory, either the builder didn't have anyone interested in this property 9 months ago when they started, which we all know that's a fallacy, or it means buyers fell out. And you have to remember, when interest rates double, what you qualified for 9 months ago when you went into contract, perhaps you don't qualify for now. So a lot of buyers are either voluntarily or involuntarily backing out of these transactions.
Absolutely.
So that's the only way right now you're going to get standing inventory. So that's a pretty disturbing factor, and a lot of that inventory. And again, there's so much more coming. And don't forget, on top of interest rates, let's say you were buying a $1.5 million home. Yeah, well, because you had $1 million in the bank in your crypto wallet. Well, if your crypto wallet now is 20% of what it was, there goes your down payment. And more importantly, like I warned about in the first time we did the interview, you have a whole group of people who were making, $10, $20, $100,000 a month on the side, trading crypto and playing Wall Street. One, your whole net worth just got wiped out.
Gone.
God forbid you got into leveraging and you got margin calls, you're literally wiped out. Then you have the people that they got wiped a little bit, but more importantly, their lifestyle, it's just human nature. Your lifestyle tends to reach at your means. Well, when you're making $10, $20, $100,000 a month trading crypto, after a year, 2, 3 years, you start to believe that this is just what you do and what you make. So your lifestyle reflects that. What should have been supplemental income becomes your main income. Well, now, not only did you lose your capital, but now your ability to earn income has been decimated, because now you're playing the real game. Now you're up one day, you're down the next day. You're up one day, you're down. It's not just you're constantly making money and then, there was a crash for a month and everything's back. Yeah. So the problem you're going to run into is a lot of people who were relying on this supplemental income, this ancillary income, they're not going to have it anymore. So qualifying for homes, keeping homes, that's going to be a problem. Before we go to down the line,
Yeah.
I've got the numbers for you.
Thank you.
So sales wise,
Yeah.
let's see. Oh, that's inventory levels.
Like for the month of March would be a good number.
Okay.
2022.
So, all right, March of 22, we had 3,050 homes sold, single family homes. That was 12% below last year. But
Okay.
again, you know, that's empty calories. That's an empty caloric number because March of last year was unprecedented. People that were going to move in June sped it up to March.
Yeah.
So that's not really normal. Now, if we go back to 2019, it's still massively above. In 2019, we only sold 2,419. Year 2018, we sold 2,947. So we're very much on par there.
So if we call 3,000 kind of the base number, I think there's a chance by August or September, you're at 15 to 1,800 closings.
So let's see. December. So October of last year, we had 2,932. The year before, 2,900. The year before that, 26, 25. I would not be surprised if we were sitting around 1,900 transactions. I think my target is Halloween. By Halloween, whether we realize it or not, next month becomes a buyer's market, even though the inventory levels don't dictate a buyer's market. The trend will be a buyer's
and the
market.
media is just going to come out and hammer.
But think about it. I mean, if we're adding 1,000 to 1,600 properties a month, by the time we have 4 months go by, where does that leave you? That leaves you clinically in a buyer's market. So I think
no doubt
there's no refuting by Halloween. It's a clinical buyer's market.
So you know what? Let's close this one up. Let's do a second video about what you would tell investors, agents, and homeowners.
Yeah, sounds good.
Brian, where can people find you? Where can people find you?
You can find me. I've got a channel on YouTube where, I mean, if you like this level of data and insight, that's what I do. That's what I've been known for. So I do monthly update videos and special news updates when there's situations like this that are greatly affecting. So please check me out on YouTube. Brian Lebo, just look up the Lebo Group on YouTube. You can go lebogroup.com. You can text me easily, 702-257-LEBO, 257-LEBO. Shoot me a text. I'll get right back to you.
Yeah, a couple of the quick things. Just wrap this up. He's being a little humble. He is the man with all the data leverage. You've got to follow him. If you are in a market somewhere else in the country, Vegas can be the canary in the coal mine. So definitely check him out. I would subscribe to his channel, Brian Lebo. That's Brian with a Y. And second, you heard Matt, the lumberjack landlord, talk about he's working with Brian in Vegas.
Yep.
That's him, this guy right here. So you know he's a trusted source for everybody on the channel. Thanks, man.
Thanks for watching, guys. See you in part 2.